What's good, everybody? It's John. I'll come back at you with another video. So with this video, I'm going to do the trade recap and breakdown for July 9th, 2026. And just so you guys know ahead of time, on this day, I did not take a trade. Now, this is a day where I did show up behind the computer, but I did not take a trade. And the reason for this is because the market did not give me what I'm looking for. And so what you need to understand about trading and being successful in this industry is that you need to have a strategy and you need to go in with the mentality of looking for specific things to happen. And if the market does not deliver you those specific things, then you need to be okay and content with walking away. And the reason why I say that is because if you trust your strategy, if your strategy is something that actually works because it repeats in the market, right, then you'll be okay with walking away because then you'll be leaving off the setups that aren't the A plus, the A's and the B setups, right? You'll allow the market to play out the season of these or things that don't even meet your criteria. And that is what makes you successful in this industry because the market is going to throw a lot of opportunities at you. And it's just a matter of you being clear in your mind on what you're looking for. And if it does not give you what you're looking for, being able to step away. So this is one of the days where I showed up. However, the market gave me something that I wasn't looking for, and so I decided to step away, right? I'm very particular in what I'm looking for, and because it did not deliver, you have to walk away, right? So this is what took place on Thursday, July 9th. So before we jump in, Thursday, July 9th, you see there's no news, right? Which is great. It's a normal trading day, and the same idea for Friday, July 10th. So I'll also be doing a breakdown for that day as well. So jumping right in here, we first step we do after we look at the news, right? We now determine higher time frame buys. So the point of this is for us to determine where price is most likely to go. Is it most likely to go higher, to go up, or most likely to go lower, which is down, right? It's just that simple. To me personally, I actually don't care. I don't care whether price is going up or price is going down. Some traders, for them, they need to have like a weekly outlook and they stick with their buy for the whole week. For me, I don't care about any of that stuff. I'm just interested in where price is at now and whether it's most likely more likely to go up or down, because to me the direction doesn't matter. If price is more likely to go down, then I'm going to be looking to sell it. If price is more likely to go up, I'm going to be looking to buy it. It's just that simple, right? So here we are on the 1 hour time frame, and on the 1 hour time frame we look to determine our higher time frame bias based on market structure. So I use market structure to determine my bias. And the reason for this is because I determine my bias using market structure prior to 8:30 in the morning and 8:30 Eastern. And this is important because beginning at 8:30 Eastern, that is when the liquidity hunt happens, when price begins hunting liquidity. And usually when that happens, it begins disobeying all other market logic. It completely disrespects market structure because it's hunting liquidity. So determining structure prior to 8:30, I found success with that, and so that's what I use. So if we look at the previous price action for the day, right? Yesterday, for yesterday's trading session, we were bearish, right? Because this was the last swing high, this was the last low, right? And price respected that on the S&P. However, um, with this move right here, with this candle right here, price broke above these highs, right? And so now price was making highs, 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 and it made the most recent high appear. So when it made the high appear, which was the most recent swing low prior to this move up here, right? Clear as day, it was this low right here. Now does price break that low? It does not, right? Price clearly does not go under this candle. So right now, when I'm looking at the S&P, I see it as bullish, right? Now the same idea if we move on to the NAS, right? The NAS, the previous structure point was this high and this low, which is why, yesterday we were bearish on the price. That's why we took price lower, right? If you didn't watch the trade recap for yesterday, highly recommend you tune in because there's so many gems in that video, right? This used to be the structure point, right? But as we can see, structure was broken with this candle, right? Price became bullish, right? And as a result, right, you start seeing higher highs and higher lows get formed, right? Price is going up and up and up. Now the highest point that price formed on the NAS was this high up here. Now what was the most recent swing low prior to that high? Clearly this level right here. Now this level, is nowhere near getting broken from this lower candle, from this candle right here, right? So clear as day, we are bullish on both pairs. So going into this trading session, I am now bullish. Even though yesterday I was just bearish, going into the session now I am bullish because market structure is telling me that it wants to go higher and higher, higher. So I'm going to trade in alignment with higher time frame buys, right? Which the direction that structure is going. So from this point, right, we now look for 830. So fast forward a few candles. This is the, all right, let me do one more. All right, perfect, right? So this candle right here, this bullish candle on the S&P, this is the 815 to 830. So this candle ends at 830. So to the left of 830, is there a, what is the most recent swing low? Because remember, we are now bullish. So we want to see a low get taken, right? Since we are bullish, we want to buy low and sell high. So we want to see a low get taken, right? And then we want to take price higher because we're bullish, right? We want to trade in alignment with higher time frame. So to the left of 830, where is the most recent swing low? And as you can see, it's this swing low right here. So to me, I'll mark it with array, put it blue, or sorry, put it red, right? Because this is the sell side liquidity, right? So if price goes down, we want it to raid sell side liquidity and then be able to buy and push price higher, right? So now, what are some obvious targets? So for me, this would be the most obvious target, and most of my targets are pretty much marked in purple, right? So I want to see price go lower, clear this low, and then eventually move its way back up to then ultimately as probably close to one of my final targets, if not my final target, to clear at this high. Now you can also look to the left and look for other targets, right? Like you have a target here, right? Because these are also very achievable targets because they're close, right? Same idea with this high right here, right? You have multiple different targets, right? So I'll just leave those for the sake of that, right? Now going into the 15-minute time frame for the NAS, right? We're bullish on NAS as well because we're always going to trade in alignment with both pairs. So here, this is the 815 to 830 candle, right? Now prior to this move to the left, if we look left, what is the most recent swing low prior to 830, right? As you can see, clear as day, it's this low right here. So this is the most recent low. And now we want to mark out the most like potential targets. Right now, obviously this candle right here took out this high, right? So at least as of this moment, as of where you're seeing with the replay, I would put this high as a target because this is the high of the session and quite frankly the high of the day, right? So this at the very least is our target right here, and this for the moment is the high of the session. Now if we look to the left, right, you might see other targets, right? You might see a target up here, right? More highs, right? Things like that. The same idea, right? The market is going after liquidity, which is, prior lows, prior highs, and, equal lows, equal highs, and is also going for imbalances, right? So that's what price is after. So you guys get the idea for the targets. Now, we'll see what continues happening, right? So this is, we're at 9 o'clock, 9:15, 9:30. Okay, so by going on the 1 minute time frame, now we are officially at 9:30, right? We're on the 1 minute time frame. So we have our levels marked for the red, which is the line that we need to see price tap into, right? Because this is the liquidity pool that we're waiting for price to touch in. And ideally, we want to have as many upside targets as possible because if price makes its way down, right? If it goes all the way down and purges the liquidity, we want to see the breaker structure being able to enter in a fair value gap right here and then make our way back up. So the more targets we have on the upside, the more reason price has to want to go higher. So it would be silly to want price to want to go up and clear all the targets because then there's very little reason for it to want to go bullish, right? And if that happens, I just wouldn't trade anything, right? So here we are at 9:30. So this is the 9:30 candle right here. So as you can see, right, as soon as 9:30 opens, you're immediately seeing an aggressive bullish candle. So now this is a good sign because you want price lower, right? Because you want price to take out sell side liquidity. You want it to activate it. And so you're seeing a bearish candle, right? So at first things are looking good, right? You want to see price make its way down. Now, you also want to be truthful with yourself too, because if you think about it, if we remember NAS, right? You notice how NAS was really like this purple line right here. This is the high of the day. And look at price. Price is really close to the high of the day and a lot further from the point of interest, from the area we want price to go, which is the sell side liquidity at the bottom. So because price is around this level here, which is close to the high, this would be one of the main targets for me to look at. Either this is like my final target, or I will close 90% of my position and have my final target be up here, right? So I'm already looking at NAS thinking that it is unlikely that I'm going to trade this pair because price is all the way up here and not down here, right? And the reason why you want to also like look at price's way as well, because think about it. If you, let's just say price were to play itself out, right? What's better for you to take a long here and have the target be up here, or for you to take a long here and have the target be up here, right? Like this is why we trade the way we do, because we want to capitalize on price moving the opposite direction to trick traders and take them out, and then you know going through the actual move, right? This is why I don't chase price, right? I wait for price to give me what I'm looking for before entering a trade. I don't see this aggressive bullish move up and think that I need to jump in the trade because price is about to take off without me. I don't look at it that way. Price needs to meet my criteria, my confirmations for me to do anything, for me to engage with it. And I don't want to take a trade like this where I enter here and I have a tiny take profit and a massive stop loss and only doing a one-to-one. I'm not interested in taking a one-to-one setup. If that's what the market gives me based on my confirmations, sure, then I'll take it. But my confirmations have not been met, right? And it's not even close and it's nowhere near with NAS. So I'm already thinking in my mind mentally at this point, and we are only at 9:34. So this is 4 minutes into the trading session. At this point in my mind, I'm thinking it's already unlikely for a trade setup to unfold for NAS. Extremely unlikely. And so as this is all happening, I am putting most of my attention and focus into the S&P. Now, what you can also do with the S&P, right? You have your previous target high, right? You can also put a target up here, right? Because this is the high of the session. So this is also a potential target for you to go after if price were to come down and clear this liquidity. So we'll just continue pressing play so you can see what happens. Right, so if you look what happened with the NAS, right? NAS, as soon as 9:30 opened up, what happened? It cleared all this liquidity here, it cleared this low here, and it cleared the liquidity down here. Why? Because we went in with a bullish bias, believing that price is going to go higher, and in many cases, what price does typically at the 9:30 open usually moves in the opposite direction first, opposite to where price actually wants to go because it wants to clear liquidity. So because we're bullish, price has a tendency to want to go down before it goes up. Why? Because if it goes down, it clears sell side liquidity, right? And because it's activating so many sell orders, it serves as the perfect counterpart for the market to then buy up, right? Look at all this buying right here. Look how high price pushes up instantly. Price explodes in that direction, and that only happens because price pushed down first to activate the sell orders in the marketplace to then move it up. And this move right here, you see this bearish candle right here, this is the candle that confuses traders, because traders will see an aggressive move down and they'll begin chasing price. But if we know that we're bullish, we wouldn't chase out the price and enter for sells. We wouldn't even be thinking about sells. We're only looking for buys. And you can see this aggressive move down cleared liquidity and all these levels before finally taking price higher. So once I seen that price came down, pushed up and cleared this high and cleared this high, I knew that there's no setup that's happening with NAS, right? Because NAS is already too far from the liquidity and it already pushed up and it hit my targets. So if price already went up, when we're bullish, it goes up and hit your targets and eliminate your targets. There's nothing for you to do. There's no trade to take, because then anything that you decide to take is going to be much lower probability, if not low probability setup. Because what makes a high probability setup is price taking out liquidity, purging liquidity, breaking structure, and then having many targets to go after. If price already clears the targets, then it's nothing for us to do, right? The same idea here with the S&P. So S&P here, this aggressive move down, this is a 930 move, right? We're bullish on price, and yet as soon as it opens up, it has an aggressive move down. Why? Because it's clearing liquidity here, clearing liquidity here, clearing liquidity here, filling in this fair value gap or this imbalance, right? More liquidity here, and it fills up another imbalance, right? You're seeing that price, typically if price wants to go higher, it first pushes down before then going up. And this is the same logic if you're bearish on price. If you flip price around and you're bearish, usually price has a tendency to want to go higher to clear liquidity and fill gaps before making the actual move to then take price lower. So once I seen price go lower, it came down, and then price started going up and it cleared this liquidity before tapping us into the liquidity pool. That's when I realized that my trading session is done, right? That there's nothing for me to do. So if you notice here, this candle that cleared this high, this is 938 to 939 candle, and this candle that cleared this high was at 935. So pretty much after the 930 open, which my trading window is from 9:30 a.m. to 11 a.m., right? Within the first 5 to 7 minutes, if you will, or 5 to 10 minutes pretty much, I knew that the trading session was over. I knew that there's nothing for me to do. So 10 minutes into the session, I'm done. I close trading view and I walk away. And you guys, now if I press play, you see what else happens, right? Now obviously, with the rest of S&P goes up and it starts taking out the rest of these targets, right? So all the highs that happened previously, it's all gets taken out, right? So this is what I'm referring to when I say it's important to have discipline. And of course you want to have patience, but you want to have discipline as a trader, because you need to go into the market with your strategy, because your strategy should be something like, it should be based on an event that repeats. Because if your strategy is based on an event that repeats, then you know that your strategy is going to deliver. You know the setup is going to deliver. You just need to wait until the setup happens. And there's going to be days where your setup is not going to happen. And that's okay, right? That's the difference of becoming of a profitable trader versus an unprofitable trader. An unprofitable trader has an employee mindset where they think that because they're behind the computer looking to take a trade, then that means it is time for them to trade. And that's not true. At least with my setup, there's very specific things that need to happen at very specific times for me to consider taking a trade. And if price are meeting my confirmations, then I'll take the trade. But in this case, right, the first confirmation, we have the higher time frame, and then the second confirmation is for price to basically take out the liquidity pool for it to raise liquidity, right? This red line, and price did not do that. So if price does not do that, there's nothing for me to do. And if price decides to take out all of these targets, right, or it even raise the liquidity pool, then the trading session is over. The trading is done, right? That just means that price decided not to go down to your area of interest before going up. But the fact that it went up and cleared all these targets means that all the targets were taken, that the move happened, right? The move happened without you, and that's okay. You just need to accept that, right? And so this unfolded for me. I knew I stepped immediately 10 minutes into session, I was done trading, right? And that is what separates successful traders from unsuccessful traders. Unsuccessful traders will try to force the market. They'll see this push up and they'll say, even though price didn't give me what I'm looking for, price is still moving up. And so I'm just going to jump in for a buy. If that's your strategy, then you can do that. But that's not mine, because, for example, if price were to come down and take this liquidity, right? Let's say that happened. I would much rather want to take a long and target these highs, right? And have a setup like this instead of trying to catch, you know, a setup like this, right? Which one looks a lot better of a setup to take? Ideally the first one, because the first one you have a lot more room for error, and typically you can catch a much larger move, and have walk away with much more profit and grow your account a lot more if the trade works out, right? But if you're, trying to take a trade, right, because price didn't hit your level and you see price start taking off and you're so eager to take a trade, and then you take a one-to-one, like, sure, you can still make some profit off that, but that might go against your strategy and that would go against my strategy. So I wouldn't do that. But I'm not interested in taking these small little like one-to-one trades, because then you would have to have a pretty high win rate in order for you to be profitable, right? And in this market, I'm not, well, this is a high probability setup, but I'm not necessarily chasing after, you know, win rate. I'm chasing after the moves that are like the A plus setups, the moves that are actually going to make a difference, right? I want to be able to enter and ride the wave. And you see, this is why this strategy is so powerful and nothing comes close, is because if you really look at it, you really think about it and you look at price, like with this strategy, you are effectively catching price at the best point, right? Like we were waiting for price to go down and clear this level so that we can enter for a buy. And then if we enter for a buy, we would have been at the lowest point to then take the move higher, right? Same idea here. We were anticipating a push down before push higher, but this push down ended up being the very beginning of the move to then start the explosion of price moving higher. So this is why the strategy is so powerful, because you can enter on a 1 minute time frame, which is like an intraday scalp entry, but then you can also trade it intraday and also potentially swing it towards the higher targets. So I'll just press play for like the rest of the moves to play out, whatever. But you guys get the idea. You see how like after price cleared the targets, then price began reversing in the opposite direction, right? Like price clears targets and then it starts going the other way, and then it goes back and like takes out this low here, right? And the same idea here, price clears the targets and then starts going back down and then clears the low out. So another important idea that I want to share with you guys is like, this is why I look for structure before 8:30 in the morning, because I've noticed that after 8:30 price has a tendency to disregard all market structure rules. Now let me explain to you guys, right? Let me clear some of this out for you guys, right? This is another important lesson that I'm going to teach you guys right here. So the reason why it is important for you to have a bias and stick with it and determine the bias prior to 8:30 is because usually after 8:30 is when price begins hunting liquidity, and so it typically begins disregarding and disobeying all market structure rules. And so this is why market structure alone is not the only way to trade. It is not, in my opinion, not the correct way to trade, because I used to be the market structure junkie. I used to say, well, market structure is law and price always has to obey market structure, because if it doesn't, then it's breaking structure and it's less probability. But I used to think that, and I'm going to explain to you why that is not the end all be all. So if we look at market structure here, for example, in the 5 minute time frame, you'll see that price is going lower, 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 and then price ultimately goes higher, right? Then you see price makes a low, oh, right? You see price makes a low and then it makes a high, right? What happens after price makes the high? Price goes down and then this low goes under that low, right? Might be a little hard to see, but I'll show you, right? As you guys can see, right? You see that this low trades under this low right here, right? Clear as day. I mean, it's still kind of hard to see, but you get the idea, right? So then if you were just trading market structure, you would tell yourself, okay, price was going bullish, then this aggressive move down, price is now bearish. So if price is now bearish, let me try to take a short from the top of the move and then target these lows, because price is now bearish. And then what happens? You will end up taking a loss, right? The same idea is what I think it should, yeah, and the same idea is what happens with the NAS 100, right? You see price going up, 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 and then this aggressive push down. You see now this push down, right? It cleared this low right here, right? Obviously clear as day. So then you would tell yourself, okay, well, price is now bearish because price broke structure. So then let me take price for a sell. And then if you were to take price for a sell, of course, right, you would try to target these lows and then price takes you out. So this is what I mean. When you're going into a trading session, right? In my opinion, you want to determine the higher time frame bias, and then you want to stick with that bias even if you take a loss. Like if, let's just say I were to take a buy and then price pushed up, right? Yeah, I took a buy and then price pushed up, like with the S&P, then, and all my targets were hit. Then just because price came down lower, That doesn't change my bias. I still believe it's bullish, and you can see that it's still bullish because price took off, right? That's what happens in these. That's what happens with these markets, particularly with the S&P and the Nas 100. You want to stick with the bias, and this also happens all the time. And you're gonna see in some of my like trading recap videos, right? That I can enter a sell, and then I might get stopped out, and so people will say, "Well, Joe, if you got stopped out, then that means the price has changed now. It's going bullish because you got stopped out." And that's not necessarily the case. Sometimes price might want to make another push before actually delivering the actual move. And because I stuck with the bias, I was now able to catch the move because price has a mind made up of where it wants to go. It just might not want to go in that same direction. So that's why it's so important that I'm always highlighting to you guys the time frames of 8:30 and 9:30 because specific things happen at these times. Once 8:30 happens, that's when it has a tendency to complete disregard and disobey all market structure rules to do what it wants to do to hunt liquidity. And then, like, remember, if we're bearish, then that means we want an old high to be taken. If an old high gets traded through, for most people, they think that's a market structure shift. That price is now bullish because an old high was traded past, but it's not bullish, it's bearish because price wants to go lower, and vice versa. Now, I know if you're still a new beginner trader, young aspiring trader, and this might be a bit confusing, but it's going to all make sense as you continue showing up and learning from these trade recap videos because I want you guys to see the market the way I see it because I used to see it. If you're unprofitable trader, if you're struggling, I used to see the market the way everyone else did. And that's why I used to struggle and lose the way everyone else did. And it's only when I began changing my mindset and mentality and seeing the game for what it actually is, I now have clarity in my mind as far as like what's actually happening in the game that's being played. And it's leading to more wins, it's leading to me catching larger moves, it's leading to clarity in my mind and understanding of what the market is actually looking to do, right? And I want you to have that same clarity as well. So I know this wasn't the best example. I'm going to have other examples right here to clearly showcase why market structure isn't the end all be all, but just know that you want to show up in this trading window with your bias already determined and you want to stick with your bias no matter what, at least for that entire trading day. So that was the video. Enjoy the video. Leave a like and subscribe as we're on the road to a million subscriber, guys. So once again, it's Joel and I'm out. See you guys for the next video. And I'm gonna have more videos on the way, so stay tuned for the rest of the videos for this week.